Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Central Pacific Financial Corp. Quarterly Report. Central Pacific Financial Corp., the bank holding company for Central Pacific Bank, offers a diverse range of financial products and services to its customers. The company's services include deposit products, checking, savings, time deposits, money market accounts, and certificates of deposit lending activities, commercial loans, residential mortgage loans, home equity loans, consumer loans, digital banking services, cash management, internet banking, mobile banking, trust and brokerage services, trust services, retail brokerage services, wealth management products, non-deposit investment products, annuities, insurance, investment management, asset custody, other services, debit cards, full-service ATMs, safe deposit boxes, international banking, foreign exchange, wire transfers. The Central Pacific Financial Corp. (CPF) stock price has experienced a slight increase in the past year, despite an initial report indicating a decline. According to recent data, the stock is up by 0.04% from its previous year's value, with a closing price of $29.42 on October 24, 2025. This modest growth can be attributed to various factors, including market fluctuations and investor confidence in the company's financial performance. The primary drivers of revenue growth or decline can be identified from the financial summaries provided. On the growth side, net interest income and mortgage banking income are significant contributors, with increases of $7.5 million and 16.5% respectively. Other service charges and fees also saw a notable increase of 8.8%. In contrast, revenue decline drivers include a decrease in net interest income after provision for credit losses by 5%, as well as a decline in other operating income by 3%. Mortgage banking income also experienced a 7.1% decrease. Net income and profit margins. A shift in favor of growth. The financial performance of a company has shown significant improvement in the recent quarter. Net income has increased by 40% in Q3 2025, reaching $18,574 compared to $13,305 in the same period last year. This growth is also reflected in the year-to-date YTD net income, which has risen by 30% to $54,605. However, profit margins have shown mixed results. The net interest income margin decreased by 8.1% in Q3 2025 due to higher provision for credit losses and changes in macroeconomic forecasts. On the other hand, operating efficiency ratio increased by 2.6% in Q3 2025, indicating improved operational performance. The increase in net income can be attributed to higher net interest income, driven by higher average yields earned on interest-earning assets and lower average rates paid on interest-bearing deposits. Additionally, the company's provision for credit losses has increased due to higher loans, changes in macroeconomic forecasts, and higher off-balance sheet credit exposure. Overall, the company's financial performance indicates a shift towards growth, with net income increasing significantly despite mixed profit margins. The company's financial performance indicates a steady increase in its ability to generate cash from its core operations. In 2024, the company produced an operating cash flow of $64,212, which rose to $76,948 in 2025. This positive trend suggests that the company is effectively managing its resources and generating sufficient cash to support its growth. The company's debt level and interest expenses have undergone significant changes over the past year. While there are mixed results regarding debt levels, with decreases of $50.6 million, 0.7%, and increases of $404,078, $301,967 to $704,045, the overall trend is a decrease in total debt from $2.33 billion as of September 30, 2025. On the other hand, interest expenses have decreased significantly, with a total decrease of $21.4 million, 24%, from 2024 to 2025. This indicates that the company has made efforts to reduce its financial burden and optimize its debt management strategy. The financial summary highlights the varying performances of different segments and regions within the company. Notably, Hawaii as a state performed well in terms of tourism and labor market indicators. However, within the islands, Oahu showed mixed results with single-family home sales increasing but condominium sales decreasing. Maui initially experienced gains, but faces challenges due to a decline in international arrivals. Management's outlook and strategy. The company's management is focused on redeeming outstanding debt and optimizing the capital structure through a new share repurchase program. Despite potential risks and uncertainties such as inflationary pressures and economic policies, the company plans to continue its business operations. Management acknowledges that actual results may differ from expectations, but believes their forward-looking statements are reasonably based. The introduction of a $30 million stock buyback plan is aimed at returning value to shareholders. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid dividends to its shareholders, indicating a commitment to distributing profits and rewarding investors. Secondly, the company has also bought back shares from the market, which can help to increase earnings per share and boost investor confidence. That concludes the financial summary for Central Pacific Financial CORP. Feel free to comment below, and I will be happy to answer them when possible.